Yep, right. So I'll take you through this. Let's copy and paste this over. And you should do the same. Okay, get yourself a ledger and general journal. This will be a largish one. You can see there the amount of entries we're going to do, but I want to see if we can get these GST ones done correctly. Okay, I'll try to zoom in a bit. Might just get the light. Much difference. Okay, so all these include GST unless otherwise stated. I hope. Yep, so they've got GST where so we've got to do a general journal, ledger and trial balance. These involve inventory as well, which is something we didn't do in term one as well. We didn't do inventory and we didn't do GST. So this is what this one incorporates. In terms of this unit as well, we've got the business, no GST is applicable. Okay, so that helps. We don't have to worry about GST in here. So think about what accounts you would be using. You're contributing what? Cash, which is your bank account, and also equipment and a motor vehicle. So no GST here. So it's nice and easy. We've done this one a few times, but I'll do it again. So 1st of March, you should be able to start typing in these. Don't worry about the year. Is not really relevant in this case. The month is, but not the year. So we contributed bank cash, which we can call this bank. Making bank. They also contribute. I'm going to do this all in one transaction. Equipment and motor vehicle. Why I say motor vehicle. And what's the next one? Vehicle. Oh, we're saying motor vehicle. It might be just a vehicle without a motor. Okay, and capital. Spell. Alright. Capital. So when you contribute to a business is called capital. I'm just going to indent. That's what I'm using up here. Alright, so let's put all this into a little bit of a way. So 120,000 cash. Equipment. It's 14. And 19 for the vehicle. Think about your accounting rules. I haven't put them up there yet, but the assets are increasing, their debit, your capital's naturally a credit. I'm just going to add them all together. 153,000. I'm going to leave the narration off. Okay, just make one line there. So yeah. So, Sarah borrowed 30,000 cash from a good friend. No GST. Where are we getting GST? Mimi Clark. Alright, so that was on the date, the 5th. 5th of March. $30,000 cash. Okay, so what are we borrowing from them? We're borrowing cash. So it'd be bank. Keeps indenting, we can fix all that up, and accounts. Input. Is it mini? And Clark. Clark with an E or Clark without an E? Just Clark. Okay, 30,000. So, a little bit of a trick here with this. When we do these, we don't have, I didn't put accounts payable in there. Accounts payable is when you purchase something of somebody and you're going to agree to pay them back later. A loan's when you borrow money in particular, money mainly, but if you borrow anything else, yeah, it can be a loan. What was it, 30 grand? Don't know what she borrowed 30 grand for. She already got 120 there. Maybe it's for something down the track. It's 130,000. 30,000. The line under it. Brought inventory from Boslow Limited, $55,000. So when we buy inventory, it's got here, it's going to be GST in this one, which is good, so we can deal with the GST. It's got here account there called Boslow Limited. So it's not saying cash. Unless it said cash, it's going to be cash. But if it's got the name of the company there, I tend to treat that as a credit. Okay, and the accounts payable. All right. So let's go over here. All right. Now I went over here and I've forgotten everything already. 6th of March. So I put it there. Okay, when we purchase inventory, it's inventory is the name of the account occurs. What are we purchasing? How are we paying for it? I'm just leaving a space there. Accounts, payable, pay. All right, so we've got something in between here. It's going to be GST in there. Now I've just got to, there are hundreds of different ways I could write this. And the tricky bit is if I show you one way, I've probably got to stick to it a bit. I'm going to do clearing. Right. I'm going to call it GST clearing for now. Okay? And that's the standard GST account that we'll use. There are other ways we can call it. We call it GST reclaimable, GST payable, GST liability, GST. There's all these different types of things, and we have to do a little adjustment at the end of the accounting period. I'm going to call it GST clearing for this term, so we're consistent, and it's going to be a slight change when we do it again next term. Okay, not this sort of stuff, but when we follow on for after a trial balance. So we'll do a GST clearing. I'm going to call it for both purchasing and selling. Okay. Just be a bit consistent for now. Just doing the indent, so just pushing out the credits. I already know what's going to be credit and cash. All right, 55,000 is the total. Okay, I'm going to assume that includes GST because it's just a nice figure to divide by 11. So we owe this company Voslo, is it? Voslu. Name the company after it. We owe them $55,000. How they distribute it is what they do with it. That's their prerogative, but we still owe them the money. They've got to reclaim and pay GST. Okay, but that's up to them to do that. We've still got to pay them that $55,000. Okay, that includes GST in there. Okay, we've got to pay it to them. The GST out of that transaction is worth, we've got to work out how much that's worth. Okay, so we've got to take that GST out of here. We also need to work out the net worth of the inventory that's made up this $55,000. So simply is 55,000 divided by 11, because it's 1/11 of that. Okay, so it'd be, I can just do the calculation here. If you want to calculate it, you can, but it does beautifully here. Divided by 11, it's $5,000. The inventory is worth 50. So that GST is 10% of that inventory. It makes up 10% of that. So if you multiply 50,000 by 10%, it will equal $5,000. Okay. We divide by 11, as you recall. I'm just going to grab up my sheet again. And that's not the link. So I'm just trying to read my note. It's one of those links I showed on the screen but didn't actually. Here we go. Alright, so when you look at GST, think about the whole price. That's the whole price, excluding GST. It's 100%. What we're doing is we're adding an extra 10% to it at the end there of that 100%. So originally it would have been made up of 10 parts of 10%. If you want to think about it this way, we've added another tenth to it, another 10%. So it's actually 11 parts now to the 11. So the nice little diagram here, I find it's helpful when you think about why we divide it by 11 to get the GST out. And when we add it on, we multiply it by 10%. Go back. Let's keep hitting save. Alright, that one's done. March, commission received for sale of artwork displayed on premises. So we're selling, we're commission. Commission is something where it's like a little bit of a incentive to sell things, and sometimes you receive a bit of commission, an extra, like a bonus, and sometimes we call it commission. It's a bit of a, like our pay for selling something. So we sold artwork. They're giving us a bit of a cut of it, and it's $440. 7th of March. So commission received for artwork displayed on premises is $440. Right. Let's do this. Okay, sorry, I just had to think about that. So bank and commission received. So commission received is a revenue account, or commission revenue. I'll call it commission revenue. It's a nicer way. There's GST on that. What did I say? GST clearing. Yeah, we can keep it with it. It's a liability account, by the way, GST clearing. All right. All right, so my bank account's going to increase by $440. Bank account's increasing. When I receive money, if I sell goods or whatever, I'm going to be crediting the GST account. When I buy things, it will be debiting the GST account. So the amount of GST I owe to the tax office will be increased. The commission I'll be receiving out of that $400, so I'll be breaking this up into GST and actual commission. So it'll be 400 minus the 10% of that. So it'll be $440 and 400. So my GST. So when you sell things, it's being credited to GST. When you buy things, it's being debited. I hope. Okay. So that money's going into our bank account. What we do with it, our bank account's increasing by that much. Okay, and this is just outlining how much each is worth, each section. Let's clean that up a bit, sorry. Make it look a bit tidy. Debits on the top, credits on the bottom of each transaction. Number 8, customers bought goods for $33,000 cash, cost price 15. So with this one here, when we sell inventory, we're going to take into consideration the selling price and cost price, because we need to work out a gross profit at the end of a period here. So let's say 8th. Right, so 8th of March, brought $33,000 in cash, brought goods. So the goods that we're talking about is inventory and the cash. So, sold goods. So bank is one. GST, I'm just going to keep putting it in now. And our sales. We'll handle GST, the other one bit in a minute. How much should we sell it for? $33,000. So our bank account's going to increase by $33,000. Our total sales. So we've got debit and side credit. So we need to work out the GST in this. As I said, the more you sell, the more you owe in GST. So we have to give 10% of this to the Australian Taxation Office. So we need to take out of that sale the 10% of that, which will be $3,000. I'll adjust this figure to 30. You don't have to have decimal places. Sometimes I like to do it just a bit to get it all balanced and accurate. This is terrible. Yeah. Second part of this one, you may be wondering, what about inventory? Shouldn't we have an inventory account in here? So inventory account we need to put into the cost price. Because what you'll find out is when we do the ledger, we've recorded it, the original when we purchased it, at the cost price. We didn't record it as a selling price. So we need to have a separate area. So cost price is $15,000 in that one there. They put it in brackets after it. So we're going to do an inventory account. Or inventories, whatever. The other account we're going to use is cost of goods sold. This is an expense account. So it's just recording, we need something to debit in this with the cost of goods sold, with the inventory. Okay, we need something to, the inventory be credited, we need something to debit the inventory with the cost price there. So we use the cost of goods sold account. That's an expense account. And when we do up our statement of profit and loss at the end of a financial period, this here figure becomes actually quite important to use. The figure we get from this to help us work out gross profits and ratios there. So it was 15. Don't have to worry about the GST in this case, because it's already been accounted for when we originally maybe purchased the goods. Say, like up here, we would have purchased them at cost price here, so it would have been already accounted for. Okay, now underline it. Yep.
Could you put debits at the top?
Debits at the top is the traditional way of doing it. So debits on the top, credits on the bottom. Yeah, so best way, oh sorry, you mean up here with,
Yeah.
no, ideally put them, so both these two figures together. Yeah, they meet together, yeah, they're the same. And then the order then after that is the debit on the top, credit on the bottom. And then just, yeah, it's this way it sorts itself out. I might just indent those a bit. Just makes it easy to spot. Here we're at it. Right, I've got a list of these rules up on a. This book doesn't do a real good job on those rules, so I've got a list of them on another sheet. This exercise is actually from a different source, so yeah, doesn't do the greatest job there, that one. So this exercise from a different one, which is quite good. So Adam Limited sold business items of inventory on credit for $46,000. I'm sorry, I missed it. This one. All right, paid $3,500 in rates, no GST. New South Wales Council. Okay, no GST, 3,500 rates. Okay, so when it says paid, it's the same date. We don't have to change the date. When it says paid, it's implying that money's already left our bank account. Okay, so it's already left. So it's going to be bank. And a bank and an account we're going to call is rates. Okay, whatever we're paying, using it to, we just need to identify really what it is the money's for. It's 350, I think. No GST, said no GST. Don't have to do it. Underline, bingo. So expense account rates is, okay, and the asset account of the bank is decreasing, so it'll be credit. Just fix mine up. And see, I'm focusing a bit on presentation here as well. It's making it look good as we go through. Alright, so I've just got to think about this one here. Sold, business. Okay. Okay. This next one, Adam Limited sold the business items of inventory on credit for $46,000. I was just going to shake my head because it's a bit oddly worded. So $46,000. So we're being sold this stuff. Okay, they're selling us goods. I don't like the way it's been placed and put. So they've sold us inventory for $46,000. And that was on the same date, I believe. $46,000. All right. Yeah, inventory. GST. I like how it does the auto things, and accounts. Payable. Adam Limited. Okay. Let's do a mile while I'm here. I'll just indent that. All right. 46,000, I believe. What was it? 46,200. All right. The total amount we owe these people, as I said, the debit will be, yep. Which one? This one? Ooh, did I make a mistake? Oh, yes, it is. Good, good, good. 3,500. That's a lot for rates. And debit should equal the credit. That's 35,000. Be careful not to add an extra zero in. 46,500 it was, 200, 500. 46,200. Here we go. So the GST is going to be, we're buying goods, it's going to be debit in this case. Our inventory is going to be debit because it's increasing. Accounts payable is going to be credit. So 46,000, hang on. And yes. Yes, expense. And so notice how with the accounts payable, accounts receivable, when I do get there, I'm putting the name of the person we owe the money for. These are called subsidiary ledgers. So being very precise and not just giving a broad name, because we need to know who owes us the money or who we owe money to so we can pay them off. We're organised. Yes? Go for it. Customer charge $506 for alteration services paid in cash. So this is a service, not an inventory. That was conducted on the 12th. Services, bank, cash, 5-6. Okay, I'm probably going to forget all that when I flick over. So our bank account is going to be increasing after that, always like that. In service. So some businesses do service and that, and GST. I didn't put GST in. I'm going to put that in. Doesn't matter if GST is not in the middle. I'll put it at the bottom. Hopefully it's been credited. 506. Yeah, 5-6. So we're going to receive, that's going to be debit. $46, and that'll be all right. Purchased inventory for 19,800 for cash as well. And what date? 15 March. So inventory. GST, I know will be involved in this, and our bank account because it was cash. How much was it? Ooh. 19,800. Purchased inventory cash for 19,800. So our bank account's going to say goodbye to that money, and that divided by 11, 1/8. You normally tell sometimes if GST's on it, the way the figures just happily work out to be, divided by 11. Not always. Next one, purchase furniture from business for office furniture products of 55,000, and then we're going to do some sold furniture. It's the same date. Let's see if we can back, yeah, 15. We'll go back. I don't know if it's cash or what. Purchased 55. Accounts payable. Furniture. GST. Clearing and bank. $55,000. Next one. Sold, purchased for office furniture products. Whoops, what did I do there? Oh, it's not bank. Yeah. Office furniture products. I think the next one is we sell it. Yeah, it's sold furniture to office staff for cash. Doesn't matter who we sold to, we're just interested in selling it. And it's for cash. So, bank, GST, and furniture. Right. How much was it? 2,200. Next up, make sure your debits and credits are equaling all along the way. All right, cash sales returns 7,480. Cost price 3,400. What was the date? 16th. So I'm selling goods, cash sales, so yeah, it's cash, it's bank. Oh, no, it's a return, isn't it? So when you do a return, so we haven't done too many returns here. Where are we? So 7,000 cash sales return says the customers return goods to us. They've sold them the goods and then they're going to do the return back to us. And that was the cost price of the goods they're returning. Simple way of doing it, if you look back at the original transaction, I'll just use it as an example. What we're doing here, the only difference is we're swapping around what was debited, will be now credited. And what was credited now be debit. Okay, the figures will be different for whatever the value is that's been returned. And sales turns into sales returns. The name of the account changes to a new. So that's originally a revenue, now be a expense. Okay. So let's do that. So sales returns. So this is the expense account. We've got to reverse GST, because that can benefit us. If we don't reverse it, we can lose out on a bit of money. What's the other thing? Bank, wasn't it? Yeah, bank. Okay, so it's cash. What we also have to do, so we have to give them back the money, the customers. What we also have to do is reverse the inventory. So put the inventory back into our stock. Unless it's damaged and we do something else with it, well, we don't have to, I'm not going to show you how to do anything else with it. It doesn't really matter. Still got to get increased. And what's the last bit? Oh yeah, cost of goods sold will need to be reversed because we're no longer selling them. So we need to reverse the cost price and the selling price. 7,480. All right. So that 7,480 is coming out of our bank account. Okay, it's made up of GST and it says it's 800 of the actual return value of the goods, of the sale, sorry. 3,400 needs to be reimbursed. From those as well. Paid electricity and gas 264. So that's just a report. Just paid electricity. You can call it electricity and gas 624. Same date. Should have printed this off. Okay, same date. So electricity. And we can call it and gas. Why not? GST and bank. So let's have a look at it. $264. All right. So that money's coming out of our bank account. 64. All right, bank account's decreasing. We can claim back the GST on that in the taxation office, and it's $240 is there. All right. And that's the paying electricity and gas. That's an expense account. Next up. Owner withdrew cash 1,500 and inventory valued at 1,000. Okay, here we go. So we haven't done a drawings of inventory yet. Quickly do the cash. I'm going to do them both together. Oh God, keep forgetting. 17th. So drawings is the account we're going to use. When you take money from the business is drawings. Okay, bank. $1,500. Inventory's worth. Okay, so yeah, 1,100. So we have to do a few little. Okay, so inventory and GST. All right, 1,500, wasn't it? Yep. All right. With the inventory, when you're the owner, you're not taking it out of your business for your selling price. You're taking it out of your business at your cost price because you're not going to make money off it. Some will do the dodgy and try to do the selling price to increase the GST, but it gets the cost price of $500. Yeah, anyway, so they're valued at, that's the selling price. When you're the owner, you're not selling it to yourself, you're withdrawing it from the business, so it's just the cost price, which we're interested in. We need to reverse GST because it's going to the owner. So $500, so the GST is going to look a bit messy. So it should be, give me a sec. I'm selling it, yeah. So I just got to think about that. I'm taking it out, and the owner can claim it back. Sorry, I've messed myself up. Just give me a sec. Yeah, from selling it, yeah. Sorry. So this looks a bit messy and yucky. All right. I was going to say on the debit side. Give me a minute. I'm going to actually have to look something up. I've never had to do this before. Look something up. So GST gets a bit horrible, and I haven't done this bit in a while. Give me 1 minute. Done a drawing of GST. Just looking for an example in my book. I can snip this out. All right. All right. Okay. They've done it this way. They've okay. I can see what they've done. I don't like it this way. All right. So yeah equals. All right, I probably wouldn't do it this way, but so they've taken the GST out of that 500. I don't like that way. Equals. All right, so they've done it. They've taken the GST out of that $500 worth of the inventory. I thought it was a credit, but it seems a bit odd. So then we add these together. It should equal $2,000 in total there. So that one might be a new one for all of you. Found the GST bit there would be trickiest. So what we have to do is we have to be good people and pay that back to the taxation office. But what you find is a lot of businesses probably won't do that. They won't record the GST when they draw it out of the business, and then they don't have to remit less to the taxation office. So there's little loopholes. You have to be careful though if you do get audited. But yeah, that's how that's handled. So you need to account the GST if you do draw out inventories. If I was to draw out a vehicle or an asset or something like that, you don't have to worry about it. That's just the inventory. And that's the cost price, not the selling price. Because you're an owner, you give yourself a discount. It'd be a bit silly if you didn't. Okay, purchased inventory for this. Then we purchased items that were returned on the 15th, so we have to backtrack and look at the 15th and how much they were. We have to do that. Got a few here left. I'll start, you should be able to get to the end. If you've done these, got the general journal, I know some people have already jumped ahead. Go on to the ledger and trial balance. I'll have the general journal done in a moment. And I'll pop up an answer. I've got one I've completed before that, so I'm not going to go through it with ledger again due to time. All right. J. Wong purchased items of inventory on account for 10,340, and the cost price was 4,700. So they're giving you the name of the person, which will be indicate its credit. Sorry, go back. Purchased. So they purchased it from us. Johnny Wong. GST and sales. I'm just copying costs. These are the accounts we'll use when we sell. All right. I didn't indent those either. All right. They're going to be credits. Uh, 10,340. And 4700. I didn't have to put a line there, but it's all right. And that one, 18th. Next up, I'll do the last one on the 18th. Going to let you do these ones, and I've got my answer up. I'll copy and paste my answer in there. Items purchased on the 15th were returned to suppliers that are faulty, a refund of, so we're going to give back a refund of $110 from the 15th. So when we reverse inventory, our bank account's going to increase. I'm hoping it's bank, and our inventory is going to decrease because we no longer have it. This is also good for insurance purposes. Say if our warehouse burnt down or something like that, we lost all our inventory, we've got proof on our ledgers and our records that we had these items on our stock and our shelves. You know, we didn't have them. So these are things here, 110. So which is the 15th? Sorry, I've got to go back up. Yeah, it was cash, it was 115. That's right, just wanted to check it was cash. And GST. Oh, it needs to be 110, it's going back in my bank. And we have to give that to the Australian Taxation Office, that money. Oh yeah, and what date was that? The same date, yes. All right. So, before I go much further, what I'm going to encourage you to do, and I know some students did this in the last term, which was very good, and I need you, I want you everybody to do this now, is starting to create something called a chart of accounts, or a list of the accounts that we're using. Because when we go over here, move to our ledger, I want you to put these in order of revenue, expense, assets, liabilities, and owner's equity. So in real low order. I'll make up a new tab here. So put all your revenues, expenses, assets, we'll go plural. So list them out, what they are underneath each one. Give it your best shot, go through and list them out what accounts you've used once you've done this, because then you're going to place them into the ledger in that order. So give each account their name, type the names into each title there, that way when we transfer over from the general journal to the ledger, you can do that, and then you can start a trial balance. okay, with the, but this is called a chart of accounts. I'll rename that sheet. We're not going to give it numbers and that, but there is a numbering system they use. I haven't actually done that with you, but that's all right. We'll deal with that later. All right. So there is a general journal. Okay, you have a go at that. I'm going to pop an answer up as we speak. Where is my ledger? So I can cut this out of the video at the end. Recording it. Done lots of solutions over the years. I know what's what. Okay. 186. Oh, there you are. I'll see. So there's the solution, it's up online. Just ignore the narrations I put underneath it. I'm just checking that drawings one. What did I do there? Did I do it right? Probably did, probably didn't. Oh yes, I did do it the same way, except I changed the GST. I'll do that now. Let's fix that up. Let's fix that one up there. That's it. Okay, that's up there on the OneNote for you to inspect. It's got a good set out. I've tried to keep it consistent. There's a chart of accounts of all the accounts that are used. I made that one all nice, and well, I didn't make it pretty. Left that some names. There's a ledger. Oh, yep. So general ledger that I haven't completed for some reason. That is terrible. And there is, I completed the ledger, but I didn't complete that. Okay, that's strange. All right. Anyway, I will leave you to look at that. And I'm come around for any questions that you may have. I'll just hit